Do you know that you can master ICT concepts and still lose? Why? Because your intraday bias is wrong. Today, you will learn how to get your intraday bias using just 3 candles only. I'm going to be backtesting this from July this 2025 to prove it works. I'm Victor Snow from Trading from the Soul, where ICT is simplified. Like and subscribe so you don't miss out on future videos. How do you win with ICT intraday bias? This is what your bias looks like. This was originally taught by ICT here on YouTube. You can check him out after this video. Our intraday bias is basically using 4-hour candles. This is 4-hour time frame, just so you will go to other time frames like 30 minutes, 5 minutes later in this video. But we're focusing on 4-hour. So all candles here are what individual 4-hour candles. Intraday bias is using these 4-hour candles to predict whether we are going to what stay away from the market for that section, or we are going to be buying, or we are going to be selling. This is how we do it. Once 5 a.m. candle is unable to sweep 1 a.m. candle range low, that means we won't trade for that particular section. Whether it is New York section, whether it's London section, whether it's Asian section. Watch carefully how we do it. Look at this example right here. Our 5 a.m. candle ended up closing below 1 a.m. candle range low. Our bias can be bearish for that section. We're gonna be drawn to this draw on liquidity, traders. So just so you know, draw on liquidity is where price is likely heading to next in the market. It is like when you're traveling from Nigeria to the UK. Let's say someone is owing you money in the UK. So everything you're doing is you're pushing towards heading to the UK so that you can go and collect your money. So as here, anything that we are doing from the lower time frame is to trade towards this draw on liquidity. It is very, very important for you to watch our daily bias video before this video. It will help you understand this video properly. I will link it right here. Adding on, in this example right here, our 1 a.m. candle range low was swept by our 5 a.m. candle. Our bias can be what? A bullish bias. We're going to be trading from here to this draw on liquidity in the market. Someone watching will say, but Victor Snow, we don't understand this 1 a.m., 5 a.m. candle, this 1 a.m. candle, something that is labeled on your candles right here. That is because you don't understand how 4-hour candles are being formed in the markets. This will definitely change the way you see 4-hour time frame. This is what I'm talking about right here. We know that 4-hour candles in the 4-hour time frames are being formed only 6 times a day. You can move to your chart to confirm this, which is what? Your 1 a.m., your 5 a.m., your 9 a.m. candle, your 13 o'clock candle, your 17 o'clock candle, and your 21 o'clock candle. These candles you're seeing here will enable you to frame whether you're going to be buying or selling for a particular section. Before this video ends, I'll show you how to make your chart look exactly like this. For this example right here, what is our bias? Comment down below. Our bias gonna be with a bullish bias. I'm gonna be drawn to this draw on liquidity. Then what of this one right here? If you can see properly, our 9 a.m. candle swept our candle range low right here of this 5 a.m. candle, and immediately did that, it went ahead to close above 5 a.m. candle range high right here. What is your bias? Comment down below. Shows you're following up. In this example right here, is it gonna be bullish or bearish bias? What? Bearish bias. I'm gonna be drawn to this draw on liquidity. Let's move to the chart to backtest this to show this work properly. So this is good, the 4-hour time frame. We'll try to backtest this from 26 June this 2025 to this October that we are currently at. And we're going to be recording the win, loss, and no trading day of this. I want you to click this thing that shows time right here. And make sure you toggle your chart to New York. And it will look something like this. To make sure your chart is in New York time. So on 25th June, 13 o'clock, what is our intraday bias? Can you see we couldn't close above this candle range high? We went above it, but we couldn't close above it. what our bias gonna be what a bearish bias. And can you see what a loss? We record it one loss. Trading is not about winning. We take losses in trading not because we are wrong, but because this is what the nature of the market. In fact, I've come to realize that in trading, success is not found by avoiding losses. It is forged through surviving them. Heading on, market is sweeping the highs and lows at the same time. I'd love to see what a clearer picture, and we got it. If you look carefully, we close above this candle range high. What can be our bias? Can be what a bullish bias. And we move to the lower time frame. Anything we are doing is to trade towards this show on liquidity, which by this video's end, I'm gonna be showing you how to do that. Can you see what a loss? We record it. Can you see this particular candle close below this candle range low? Our bias can be what a bearish bias, which on 26 June 2025 what we went to our draw on liquidity, which is a win. We record it. Can you see this section? We failed to close below this candle range low. Our bias can be what a bullish bias. Can you see we won it? We record it. Can you see this candle failed to displace this candle range high? Our bias can be a bearish bias. And can you see a win? Went to the draw on liquidity. We record it. On 26 June 22 o'clock, what will be our bias for this section? What a bearish bias. Wanna trade towards this draw on liquidity. And can you see what a win? I'll go ahead and record it. On 27 July right here, our bias was what a bearish bias. Why? Tell me at the comment section. And can you see we went to the draw on liquidity, which is a win. We record it. Can you see what this next candle closed below this candle range low right here? Wanna be drawn towards this draw on liquidity. Let's see. And can you see a win? Went to the lower time frame, trade towards this draw on liquidity. For this right here, we close below this candle range low. Our bias can be what a bearish bias, which we got it a win. So currently now we have 7 wins, 2 losses, and no stay away day. There's no session that we didn't trade. Let us continue. In this example right here, we failed to close below this candle range low. What will be our bias? Can you see what a bullish bias right here? Gonna trade towards this draw on liquidity. Can you see what it is a win traders? Can you see we failed to close above this candle range high right here? We went above it, but we couldn't close above it. I want to see what a bearish bias right here. Let's see. Can you see what a win? I will record it. Again, our bias gonna be bearish, right? Can you see what it is a loss traders? And I will record it to keep it transparent. Can you see what this bullish candle displaced this candle range highs right here in the market? I will expect what a bullish bias. And can you see what a win? We got it. I will record it. Again, can you see what we displaced this candle range high right here? If you're definitely finding it difficult to understand all this, which I finally cracked ICT daily bias, I'll link it at this video description. Alright, heading on, we displace this candle range high. What will be our bias? Drop it at the comment section. Love to see your reply. What this draw on liquidity in the market? Let's see. Can you see what it is a loss for us? Can you see we displace this candle range low right here? Our bias gonna be what a bearish bias traders. We're gonna go to the lower time frame to choose towards this draw on liquidity. Let's see traders. Can you see what a loss? I will record it. Heading on, we close above this candle range high right here. What will be our bias? This draw on liquidity, a bullish bias. Can you see a win? We'll record it. Again, what's our bias right here in the market? What's a bullish bias right here? Let's go. Can you see a win? Or record it. Then can you see properly now? We are just approaching a fair value gap in the market. The last time we approached a fair value gap was right here, and we actually took what a loss. What should we do right here? Are we gonna be having a bullish bias or what a bearish bias? Let me know. Before I give you the answer, give me a thumbs up and a subscribe if you're learning something new in this video. I would want to sell in the market. Why? That is because you don't understand the relationship between bias and PD array matrix. This is what PD array matrix looks like. ICT gave us 14 institutional levels to trade from, which are what? Old high, bearish order block, bearish rejection block, bearish liquidity void, bearish fair value gap, bearish mitigation block, bearish breaker, bullish liquidity void, bullish breaker block, bullish fair value gap, bullish order block, bullish mitigation block, bullish rejection block, and finally our old lows. These levels are all liquidity levels in the market. Constructing your intraday bias of these levels would improve your win rate. Take for example this example right here. Using what I told you, our bias is supposed to be bearish, right? Tell me the reason at the comment section. It shows you're following up. But if you check properly, we just arrived at what? A rejection block. What will now be our bias? Will our bias still be bearish? Answer is what? No. In fact, we're going to be having what? A bullish bias. This is just like when you're traveling out of Lagos towards the United Kingdom. Then when you go to the United Kingdom, you return back towards Lagos. When I go to the lower time frame, everything that I'm doing is to trade from here towards this row on liquidity. Both of these example right here, we just approach our fair value gap, which is on the low of our 17 o'clock candle. Don't overlap with the high of our 1 a.m. candle. There's an institutional gap right here called what? A fair value gap. This will automatically make our bias what? A bearish one. And we expect to see something like this from what? UK back towards Lagos. Pause this video for a minute and comment bullish or bearish bias for this example right here. If you choose bullish bias, you are what? Correct. Why? Even though our bias is what? Bearish right here, we had an order block which is among the ICT PD array I listed earlier. For this example right here, was our bias right here. If it picked bullish bias, you are wrong. When our 9 a.m. candle go to our rejection block this time around, it's closed what? Below it. Hence our bias will be what? Bearish one. So we're gonna be going to the lower time frame. Anything we are doing is to trade towards this draw on liquidity. It's like when you're moving from Lagos to what? To the UK, and you didn't stop at the UK, you flew again to what? The United States. So before I move to the lower time frame to show you how to backtest this on usdjpy, comment down below if you have any question. This is usdjpy, the 4-hour time frame. First thing you can agree with me on 1st July this year, even though our bias was what? Bearish one, we had a PD array matrix called what? A rejection block right here. This is what your bullish and bearish rejection blocks look like. Your bullish rejection block is when we mark our box from the low of the candle to what? The close of the candle. While for our bearish rejection block, we mark a box from the high of this candle to what? The close of this candle. And this will be our bearish rejection block. Can you see right here, we didn't break our what? Our rejection block. We switch our bias from bearish towards bullish bias. And can you see how markets we won this trade? This candle pushed towards a PD array right here, which is an order block. Our bias gonna be bearish. This is what I've been teaching you. Let's see. Okay, can you see this candle right here? Price actually swept this candle range high right here before going down. Now we have to draw on liquidities, both bearish bias. Which one are you gonna be choosing to trade to take profit? This or this? I'm gonna be picking this one right here. And can you see what? It is a win right here. Can you see again? We failed to display this candle range low right here. My bias gonna be a bullish bias. Why? Comment down below. Because of this other block have been used. I do tell you guys that these PD arrays are like fuel we pour into our car when we want to travel. So for our car to run, this fuel must be in our car. But when the fuel is exhausted from the car, our car will not run. As when this other block have been used, there is no longer fuel to fuel our trade to the downside. I will go ahead and remove this other block right here. And can you see how markets smashed here, and it is a win. And you see we failed to close above this candle range high right here. This will be a loss for me because of I would definitely choose a bearish bias. We close above this candle range high right here. Our bias gonna be what, a bullish one, which we got a win. And can you see what, we just approached another block, which is a PD array. What will be our bias right now? Our bias gonna be what, a bearish bias. This is just like when you move from Lagos to the United Kingdom, and when we go to the United Kingdom, we started coming back to Lagos, Nigeria. So that is from UK down towards Lagos. TP smashed. We've arrived Lagos. So again, I told you guys that once another block have been used, we can go ahead and remove it. Also, if you check properly, we also have another block right here. Our bias gonna be what, a bullish one, which can you see a take profit, a win. So whenever we have something like this, we anticipate our next day models, which is what, when we have series of bullish candles. This will allow you frame your weekly bias. I'll be linking my daily bias video at this video's description. You don't want to miss this. My trade time frame entry model using this. I'm gonna be using the 4 hour, 15 minutes, and 1 minute. The 4 hour gonna be my bias strategy. The 15 minutes I'm gonna use my bias strategy as well. 1 minute gonna be what, changing state of delivery that I've taught you in candle theory videos. This is gold, the 4 hour time frame. This trade is from 30th September this year right here. First thing you can see right here is a PD array called a rejection block right here. And can you see what, this current 4 hour candle fell to close below this rejection block. Also, it fell to close below this particular candle range low. What will be our bias? What, a bullish one. I'm gonna mark out this candle range low, draw a box from the candle range low to the close of this candle. So I'll have a green box which I call my trading zone. I will then move towards the 15 minutes time frame. From the 15 minutes time frame, you can see properly we have another block right here. I'll wait for market to return back to this other block right here. Then we'll move to the 1 minute time frame. Can you see when market returned back to exactly this other block right here, we had a change in state of delivery, which is what happens whenever we want to switch from what, down to up. I'm gonna make my entry right here, stop loss below this other block, because markets can actually return back here a little bit before pushing to our direction. Then I will make a TP 1:2 or 1:3 ratio traders. Let's see how the trade unfolds. Okay, and what, a full take profit smash traders. If this video helps you improve even a little as a trader, give me a thumbs up and a subscribe right now. For you to understand all this properly, you have to understand how your candles behave, understanding your candle range theory and your total sweeps, and have a playlist dedicated to that from the beginner to advanced trader. I'll link it right here, blending CRT plus market structure. If you want to check out our daily bias video, it will be also linked here.